Hello and welcome to another MCO update on XRP. Here on the XRP chart, the price is still in this previously communicated range. We are still holding above critical support levels. There was a reaction here early in April. I mean, you could say this, it didn't quite touch it. Okay, it didn't quite get to $1 to $1.57, but that's okay. I mean, those wicks, those spikes on which the target to the downside was measured, I mean, they are wild, and there are some inconsistencies across different exchanges. I mean, I'm using Bitstamp here, to be fair. It's not probably the best exchange, but it is the exchange that has the entire history of the chart. So that's why I use it, right? Many other exchanges don't have the entire history. So I find that a bit more important to be able to consider the entire chart history. So yeah, I mean, overall, what are we looking for? I mean, we're looking for still another rally in wave 5. That's the main view here. Surely another low can happen. Yeah, another low can happen. All I want to share with you is the idea that you need to be prepared for that if that happens, and what the main support levels are, and they are unchanged between $1.21 and $1.55. So as long as we're holding that zone, the overall idea is that higher prices are expected, and that would be, higher prices in wave 5 of 5, potentially in the yellow scenario. Other scenarios are possible, but we don't really need to talk about them until certain important developments are happening on the chart, like a break below support would shift the focus towards a deeper pullback with support between 61 cents and 88 cents. That would be an alternative scenario to the upside. If this is a fifth wave that's unfolding to the upside, then we should first of all see a break above $3.30, previous swing highs from January, and then a rally to $5 to $5.65 could happen. That's just for anybody who's interested in the context. Let's take a look at the shorter time frame. Here on the shorter time frame, I'm tracking two variations of that scenario, you could say. I explained to you over recent days, I spent the last week, during which not much happened, spent the last week explaining that the market has not dropped in any impulsive way. So while the yellow scenario, which allows for another low, is possible, and is actually quite likely based on the overall context, the microstructure doesn't support that. There was no 5-wave move down from any high. So I don't necessarily expect a break below $1.82, or let's rather say, to confirm the yellow scenario, I need a break below $1.82. Until we break below that level, the market could easily go higher more directly, for example, in the blue scenario, in which we are tracking a 5-wave move up as part of a potential diagonal pattern. So that means the blue scenario is what I'm watching at the moment, as long as we're holding above $1.82. The main question then is, if we zoom into this structure, have we actually already bottomed in the B wave? Was this already the low of the B wave? It's technically possible, but it was a very, very weak pullback in that case. It is certainly only a 3-wave move down, so it does keep the door open for higher, but it's not really deep enough to, let's say, tell me with high confidence that this was all of the B wave. From that point of view, I think we need to be ready for potentially another dip into support, but that will probably depend a little bit on the general, let's say, mood in the sector, the sentiment in the sector, because at the moment the market is still pushing higher. So I told members earlier today in one of the member updates that it takes a break above $2.25, which is the 13th of April high, to indicate that a more substantial low already formed. Until then, I'm going to watch for, or at least I would be prepared for, another dip in support. It would look best, but sometimes the market takes the lower probability pathway. So what is more important than the microstructure is actually the zone. And we haven't broken below the $1.82 level, which represents the lower boundary of that Fibonacci zone, which means overall against that level, the focus can be on higher prices. That also means, however, there is still plenty of room for another dip before we go higher. So I just would be cautious about that. And a break below the $2.06 level is needed to suggest this C wave down is actually unfolding. Until then, we could easily go higher more directly. But there is not much clarity here. Yeah, there is just not much clarity. Overall, not much happened since the market topped here a week ago. That's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.